You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Monday. It is noon Central. It is 1 p.m. Eastern. It is the beginning, the commencement of our broadcast week here on the old Options Insider Radio Network. My name is Mark Longo from the aforementioned network, as well as, of course, from the optionsinsider.com. Hopefully your week is starting off well. If your week is like the markets, maybe it's turning around a little bit out there right now. Of course, if you like what you hear, as always, keep those reviews coming on your platform of choice so we can keep the influx of new people continuing to discover the network and indeed the program. And B, if you have a question or comment, send it in. We do love to hear from you guys. And joining me on the old program today, let's go out first to the sleepiest, the quietest, the most tranquil, and also the most delicious of Hamlets, because they have Skippy Zeros. Yes, I'm talking about St. Charles, where we are joined once again by Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program on this apparently turning into an Uncle Mike Monday, sir.
We're getting close. It's going to be interesting. It definitely did not look very promising for the Bulls last night with the futures, but buyers came in, apparently. A lot to talk about today, as always.
Yeah, the old BTFD seems like it's in full of force, at least today. And also joining us out here from another hamlet of Chicago, one might say it even changed America. Yes, I'm talking about the homeland there, at least for the time being, of Option Pit, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian. Mr. Meatball, welcome back to the program on this turnaround Monday here, sir.
Quite the turnaround, right? Pretty ugly morning, and then the NASDAQ 100 pulled us positive, and now the Russell 2000 is currently up from down huge, is now up 2%. VIX is now actually down, so all kinds of back offedness happening, which you don't usually see. So I'm impressed by this turnaround that the market is giving us.
Yeah, I like the back offedness, coining terms all day long here on the Option Block as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. It gave you a little bit of a taste of it just now. Clearly, the markets are in a bit of a turnaround mood out there coming into this morning and last night. things were dire. Looks like maybe the bull had finally been spooked by all the lingering fears of the coronavirus. Of course, there's been a bit of a resurgence here in the U.S. as we've been reopening. We have the governor of New York threatening to lock things down again if things don't get controlled over there. Also seen escalation of cases in places like India and Brazil, which are perhaps threatening to overwhelm their already fragile healthcare system in those areas. So things that collectively didn't look good and still, quite frankly, don't look good for the broad economy. So coming into today, we saw most of the major indices taking a big drubbing, to use a technical term. We saw the SPX get down to pretty low out there, 39.67, I believe, before bouncing off of that. We saw similar levels out there. Mark was just talking about the Russell 2000. It got down as low as 1343, now over the 1400 level out there. So a pretty major turnaround pretty much across the board. In fact, coming into showtime now, we're seeing most of the major indices actually in the green. Only laggard is the Dow, and it's probably only a question of time. Of course, the S&P just ticked negative again, so we'll see. Maybe the turnaround is short-lived. But the NASDAQ up about 0.5% now as we're speaking. The S&P off again, about 0.25%, and the Dow off about 0.5%. So still a mixed bag, but certainly much better than it was for the bulls, at least just a few minutes ago out there. So this is the kind of market we find ourselves in, listeners, coming into the show. Yet another kickoff to another crazy week here, as it has been for months pretty much. Coming into showtime, we did see the VIX north of the 37 handle, about 37.25. That puts it up pretty much 1.25. Right now it's right around the 36 handle, so it's pretty much given all that back up. It pretty much puts it almost exactly unched from where it was this time last show, right about 36. Our old friend VVIX coming into showtime was north of the 150 handle, about 151. That puts it up 21 and a half points to be precise out there. So volatility, that's understandable. That's pretty frothy out there right now. And our old friend VXX, a.k.a. the product most of you guys like to fade aggressively, it was looking up pretty hard. It still is up pretty hard, but not quite as much. It was at about a 39.5 coming into the start of the show. It's given some of that back up since then now. That puts it up about 4.5 points from last show. It's about 38.75 or so right now. So giving up another, about 3/4 of a point. It hit a high of about 44.18 recently. So it had looked like the worm was turning out there in VXX. And of course, a lot of that driven by juicy backwardation out there in the VIX futures, the land. Now some of that coming off a little bit again. So maybe those of you who like to play on a little bit of downside in VXX, if you could stomach the extreme costs of it, maybe some spreads as opposed to just some outrights out there, perhaps this is an interesting environment for you folks. You know we're getting into volatile times when I get my briefing in the morning. When I first wake up, I have my smart speaker give me my briefing. And today's briefing was all about volatility and this new quote-unquote asset class of volatility. So, when it's reached that level of market saturation and general awareness penetration, that, things are perhaps a little bit volatile. Folks like and outlets like CNBC and others starting to measure the cost of 5% out-of-the-money puts on the SPX. Looking at it, it was in December 1.3%, about almost 3%. Last week, and on Thursday got up to just under 5%. Of course, the S&P had sold off too, so that's going to play with that calculation a little bit. As we always say, there's a context of volatility, but still, puts getting a little bit more pricey out there. So some folks in last show was asking us what we'd recommend about hedging out there, and that's one of the reasons why we didn't just say, hey, go out and buy up a bunch of downside puts. That's pretty pricey right now to go. Of course, if the worm is turning, maybe you don't want that protection anymore. A lot of interesting things to parse, a lot of interesting things to discuss on today. Let's go out to Uncle Mike land first, because it is turning into an Uncle Mike type of day. At least it was. Who knows if that will maintain. So Mr. Uncle Mike, sir, in between your efforts just to talk up the market and make us rally through your sheer force of will, what else is lighting up your tape, sir?
Well, what else is there besides making the market go up by sheer force of will? Because we all know that always works, right? Not, but anyway. The main thing that I am seeing that I think is really important at this point would be the 3,000 mark on the S&P 500, and that we're kind of like a magnet to it. Again, is what it appears we might be going into. I've talked about I remember talking about this at the 2,000 level on the show a few years back. Talked about it at the 3,000 level, in that the market seems to like to be by the 2,000 and 3,000 level, or all these key numbers. And perhaps that'll be the way it is with the 4,000 number, should we make it that far. So that's one of the main things that I'm seeing. Also, we did go below the 200-day moving average last night, but we're back above it again today. So that's another key number. So the big debate that's going on right now between market participants is that, are we in just a little bit of a pullback? And by a little bit of a pullback, meaning the fact that we've had such a major run from the lows of a couple months ago, or is this the end? And so I really don't know, quite frankly, at this point. Like in my rules, if the market's negative on the year, I'm very cautious. So I do have a small position in my aggressive trading area. So, but it's still very small, below 5%, which is what my rule is. And so, but with that, what I'm looking at on here is that I think some of the key numbers are 3,000 and 3,200. I was talking with a client on Friday. We were just kind of joking around. We're saying when 3,200 hit a little over a week ago or whatever it was, we're saying, 3,200 might be the new 3,000. And then now 3,000 is the new 3,200. So, I think those are some numbers that we really need to respect on both sides of it, because of the fact that we have the psychological mark of 3,000 on the S&P at that level, as well as the 200-day moving average is about there, and 3,200 is roughly the open of the market this year. So if we go significantly above 3,200, then we're positive on the year and we're going after a new all-time high again, or getting closer to it. Whereas if we're not above it, then we're still negative on the year. And so I think that when you are negative on the year, it's not a strong market, in my opinion. If the market can't be positive on the year, then it's not strong. That's just the bottom line to me. So I think that those are some of the things with which we need to watch. Also, we don't seem to have much rioting going on right now, so that's a good thing. What's going to be interesting to see is that if we did have a lot of COVID spreading, or if there were a lot of COVID people or a lot of Corona people that were out there rioting and or protesting. I know there were both, trying to be fair to both sides on this. The peaceful protesters plus the violent rioters, there were both out there, no doubt about that. But the people that were out there, how much did the COVID start to spread again? Is that going to hurt us? Because magically the politicians that were adamant about people staying home so much about 3 weeks ago, now that we had protests and people out, no politician wants to step in and say, that's bad, you can't protest, because of the fact that they don't want to be labeled a racist. Once again, I'm not trying to be political here, but that's definitely something that needs to be paid attention to as a market participant, from the standpoint that could have led to perhaps a second wave with COVID, because of the fact that there were so many people out all of a sudden, and people out in the streets, and people were near each other. And the protesters, once again, I think it's a lot of validity to it, but not the rioting, but the protesting. They weren't practicing social distancing. So I think that's something that we need to keep an eye out for over the course of the next couple of weeks. So that's what's lighting up my tape at this point in time. And, we have an election coming up in a couple months. So watching that as well.
Who can keep track of such things as elections? Of course, you jinxed yourself, Uncle Mike. You started talking about SPX 4,000. And, we're still struggling to maintain the 3,000 level. So you may have just jinxed your fellow bulls out there. So if you have hate mail, send it to Uncle Mike. Out there. Let's turn our attention now to the greasiest of meatballs. Mr. Meatball, sir. Obviously, vol is on everyone's minds today. When I hear in my morning briefing discussion of volatility as an asset class, that's we've hit another level. So, what's lighting up your tape, and what's lighting up the tape of your crazies in the pit chat these days, sir?
Yeah, we still have the VIX in a kind of a backwardation format. We still have the market having basically moved to flat on the month. The crazy thing is, with all of the selling, we're actually still green for June. Just some absolute tear your face off sell-offs, rallies, and I wouldn't be shocked if we still end up giving away some of today, or if we end up 50. Who knows? What I do know is that we're back to kind of some of the new economy names leading the old economy, and a lot of names like XLI, the transpos, they still don't look that great today. So, there's lots of green, recovery. And then if you look underneath, it doesn't look that great. It does not look that great at all.
Yeah, I know that's a drum you've been hitting for some time out there, and a lot of people have picked up on that as well, that it's not exactly the most broad-based of the rallies, this V-shaped recovery. It's kind of isolated to top names in the FANG and others, and, you know, does a rally in Amazon mean things are going to be good for coronavirus in Brazil or India? Probably not. Yet we have seen the market, as I've said before, kind of whistling past the graveyard. Maybe there's a little bit of that going on out there today as well. Let's see what's going on from a broad overall options perspective out there right now. Looks like most of the indices have now ticked green. Oh, no, S&P back down. So it's a back and forth, but it's for a brief moment there. It was all green. The Dow actually is green right now, and the S&P still a little bit in the red. So wait 5 minutes and you'll see something entirely different out there. Let's see what we're seeing from an overall volume perspective on the options front. A fairly active day, as you might imagine. A lot of back and forth equals volatility equals some volume usually out there in most of the major indices. VIX, as of a few minutes ago, just threatening to cross the 300K mark, 299,000 contracts on the tape. The ADV has obviously, if you've been paying attention to the last few days or in the last few weeks worth of shows, listeners, you know it's been ticking up out there. It's up to about 428,000. That puts it up about 70,000 from our last show. So VIX has been seeing some paper of late. Again, not surprising when we're seeing it rally back north of the 40 handle again and vol spring into life across various components out there. A SPY at about 3.75 million contracts. That's still shy of the ADV, which is about 5.3 million, which is also ticking up of late. The S at about 775,000 contracts as of a few minutes ago. The ADV ticking back up over that 1 million mark, about 1.2 million or so. Still light from an overall S perspective, but looking a little bit stronger than it was of late. We'll see, of course. Actually, is today? I think today might be the day. I'll have to check and see. I think today's the day when the pits are coming back. It was supposed to be the 8th, and then it got delayed. So I'll have to dig into that, see if that actually happened without a hitch. Mr. Meatball, do you know for sure, did the S reopen today, sir?
It did. I'm going to send you a picture right now of what it looks like. And it looks extremely different from what you're used to in terms of the SPX and how spread out everybody's. They took all the little terminals and turned them into like individual little pits. And so it looks kind of, I'm sending you picture right now. It looks very different from what you're used to. It's almost like each SPX broker is now their own pit. And then they have an A and a B team that are filling the paper. But it's back, and it's good to be back, and people seem pretty happy.
Oh, yeah, I'm looking at it right now, and you're right. They are like in little isolated pods. Everyone has face masks on. It is a very different beast from even a few months ago when it closed out there, listeners. But the S is back. So those of you out there who've been saying maybe the lack of a pit was hurting some of this complex paper, I know, Mark, you've been beating that drum, that on the electronic front, a little bit easier to step in front of big paper with nickels and dimes and pennying and all that good stuff. Seems like the volume today, at least, is supporting the return of the pit to some degree. Like I said, the ADV ticking up. That's, of course, all electronic paper. But today's volume looking like it's probably going to beat that, and maybe some of that being the return of the old pit. We'll have to wait and see. Maybe also some of that having to do VIX, obviously, back as well. So maybe some of that going to contribute to a little bit more paper out there in VIX land as well. There still is a cadre of institutional paper on the S side, and then the VIX side likes the old open outcry execution, likes to get their complex stuff up and running in that fashion. And for them, that option, pun intended, is back again. We'll see how that unfolds. The Q's doing decent paper as well, closing in on 500,000 contracts, about 494,000. The ADV, 944 out there, 1,000 right now. And the Russell, at least the IWM flavor, we just talked about it. It's been blowing the doors off. If you want to know more about that, of course, Recon's coming up. Check out TWIFO. We've been talking about it a lot on that program. IWM had about 532,000 contracts out there. The ADV, 715,000 contracts. So IWM lighting it up out there, catching up to the Qs, are pretty close to it in terms of ADV and blowing the doors off VIX, at least right now. Let's see what's blown the doors off. Easy for me to say out there in the top 10 most active individual names, and it's a pretty active day out there. It cost you 144,000 contracts to break into the top 10. That gets you all the way to BABA. So BABA lighting it up out there, number 10 Number 9, Microsoft. Seems like a healthy smattering of our old favorites here in the top 10. Microsoft had 175,000 contracts. Then we break over the 200K level. We get to AMD, 204,000. Number 7, Neo. So some interesting overseas names on the list here today. 207,000 contracts for Neo. Number 6, Hertz. Mr. Meatball, your favorite name. Hertz back on the list at number 6. I guess they're threatening to sell more equity today. Who knows? Are they worth 8 times what they were before bankruptcy? Who knows out there? But a lot lighting it up to the tune of 214,000 contracts in Hertz land. Number 5, American Airlines, 231,000 contracts. Number 4, number 3 are symbol twins out here. Bank of America, number 4 at 240,000. Number 3, Boeing, our friends across the street, at 244,000 contracts. Always locked together very frequently in the top 10, which is kind of weird. Number 2, Tesla, 283,000. That means you know what number 1 is. It's Apple. Not quite at the 400K level right now, 357,000 out there. Let's glance really quickly to see where the biases are lurking out here in the paper today. Seems like Neo and AMD are both neck and neck. Neo has about 80% of its paper on the call side of the ledger, AMD 79%. So those two leading the biases to the upside. Don't see a lot of bias, or actually I take that back. There is a bias to the downside in American Airlines. 59% of that paper coming on the put side. That's not something we see very often. Usually when it's a high volume, it seems to almost universally be aggregated in the call side for a variety of reasons. But right now, American Airlines, the only one in the top 10 that is biased towards the puts. If you're looking for some earnings biases out there, not a heck of a lot left to really parse on the season. There are still some names, though. You got Lennar out there, which is an optics company, I believe. You got Groupon, of course. They're on Tuesday. Oracle on Tuesday as well. So Tuesday's still a big name or big day, I should say, for some big names out there. Then it kind of falls off. Thursday will be Kroger. Be interesting to see how this pandemic and the issues with the food supply have impacted them. Obviously, overnight, supermarkets have become critical to the infrastructure of our nation in a different way than they were a few months ago. It'll be interesting to see. Friday, CarMax. We'll see how the used car business is holding up. A glut of cars out there, not the least of which Hertz dumping a lot of its fleet. Probably going to impact prices out there in CarMax, so we'll know more on Friday. Really quickly, still are some earnings move results reports coming out. Got one here for CarMax, the aforementioned CarMax out there. This came in, hitting the website as of this morning. TheOptionsInsider.com is the place to go for all this cool earnings data, courtesy of our friends over there in Orat's Land. Coming into this time of this report, CarMax was at $89.98. They were pricing in a straddle of $4.13. That's actually a little light compared to recent moves. They moved about $4.40 in aggregate. So that's kind of in keeping with the theme of this season, light straddles, and it seems like mostly it has borne out, as you said before, the overall earnings season report, which we continue to update. You guys can see for yourselves over there at theoptionsinsider.com. You'll see that in aggregate, the season underperformed from an overall vol perspective at right about exactly 90%. The weakest week was actually the last week out there, week 6, 43%. Obviously, 100% would mean everything moved in line with the straddle, so 43%. Things kind of underwhelmed in that final week. Only 2 weeks out there. Actually, I take it back now. It's been adjusted to 1. Only 1 week out there outperformed from an earnings straddle perspective. That was week 5 at 126%. Everything else was shy of the 100% level, which is kind of interesting. Let's see what kind of interesting paper we can unpack for you as we unleash our Eye of Sauron. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
Welcome to the Odd Block, the portion of the show where we usually unleash our Eye of Sauron while he's out there scouring the markets for us. Mr. Meatball, I know I just touched on some of your favorite names, like Hertz. I know that I knew once I said that was going to set you off, as well as some of the airlines. What are your thoughts on some of the paper we saw on those names today, sir?
Well, Hertz is interesting because you were asking about what, the bankruptcy court judge gave them approval to sell $1 billion worth of their own stock, which you and I did not think fathomable the last time we talked. But lo and behold, they have, and the stock is down. And now all they're waiting on is SEC approval. So it's a race. Can retail traders hold up Hertz long enough for them to sell $1 billion worth of stock Or will the powers that be and retail investors wise up and get out of the way? So it's really a fascinating what will happen, who done it type of mystery with Hertz here over the next couple of days. And then we saw United come out and say that they're expecting an 88% drop in year-over-year passengership, which is actually a plus for them. And so if you're wondering why transpos look ugly, that is why. So there's just an amazing amount of trading going on. Hertz is like absolutely a godsend for trading. There's so much two-way paper. But, the thing to remember is, these hard-to-borrows that are going to go out of business, they're eventually going to go down. So you have to trade from that perspective.
I'll have to pull up an options chain. Hertz at $2.22 right now, off 62 cents or nearly 22%, listeners. I'll have to pull up a chain later to see if I can see how juicy those puts are getting out there. Spoiler alert, probably pretty juicy. Let's see what juicy options paper our Eye of Sauron came up with today. We're going to start in a different neck of the woods here, listeners. Going to go back out to Dish Networks today. Ticker symbol DISH, D-I-S-H, of course. Trading right now, looking on the upside right now, 34.18, up about $1.50 or about 4.5%. This is the name that a year ago was trading 37.60, so not that far removed from where it is right now. It peaked up in July of last year at about 41.60. Then it kind of sold off again down to about $30 and kind of hovered in that range from the low to mid 30s for the rest of the year until February, until pretty much mid-February. It peaked out around 41 and change. And then we all know what happened from there. Sold off hard, got down to 18. Actually, looks like intraday got down to a low of 17.09 in the height of the madness in March 17. Now we're at 34, so it has effectively doubled in the last couple of weeks. Got as high as 37.32 back about a week ago, actually exactly a week ago. So it's off that level, but still pretty much 2x where it was just a few months ago. So a literal V-shaped recovery out here in Dish Networks. Let's see what our Eye of Sauron has found for us. Is it fading this rally? Is it think it's going to keep going? Let's see. And in particular, it looks like we found 14,000 of the ACH 45 calls. So yeah, about 11 handles out of the money, listeners, going up for $1.45. These were 45 cents at 155 when this went up. So spoiler alert, they were gobbling these up to the tune of 14,000 of these bad boys. This one up over there on the Philly. There are earnings between now and October. The next cycle is on July 29th out there. So Mr. Meatball, we've already seen an impressive 2x recovery out here in Dish Networks. Seems like somebody is betting the farm, or at least a small ranch, that this recovery is nowhere near done, and we're going to blow the doors off another 11 or so handles by October expiration. What do you think of this kind of old school odd block paper, sir, swinging for the upside fences with calls in Dish, sir? Yeah, that's what it seems like, is somebody, making a straight bet on the underlying going up. I didn't see a lot of stock. So, the question is, are we just, did somebody dump some stock we didn't see, and this is their upside in case it keeps going higher? Or is this a straight up long call? And with the timing and where it's located, I think it might be an actual bull play. It does have that air about it. So we're going to put it in our to be watched category. Listen, we'll keep an eye on it over the next few weeks and months, and probably come back to it between now and October, see how our friend here is faring. What do you think about Dish? You think crazy 11 handles with an upside between October? Is that crazy? Is it outlandish? Is it rational? Well, let us know as we're going to move on to our next name. This is a newcomer, I believe, to the odd block. It's not a name I recall speaking about or analyzing anytime recently. This is Zuora Inc., ticker symbol ZUO, Z-U-O. If you're wondering, this is an enterprise software company that helps companies launch subscription-based services. They help you automate billing and collections and all that fun stuff. Let's see. They're trading right now $13.33, up 91 cents, or about 7 1/3%. So a good day out there in Zuo land. Let's see if the last year has been favorable to them. Actually, not so much. A year ago, they were trading $15.91, so north of where they are right now. And they kind of bounced around that level for the better part until all the madness popped off in February, listeners. They were trading about 16 and change, in mid-February. Then they sold off pretty hard, like everything else did. Got down intraday to as low as 621, listeners. So they got annihilated pretty aggressively. And then slowly but surely, and a lot of peaks and troughs over that time. It wasn't just straight up. There was up and down. But net in aggregate, they have pretty much rallied, not quite all the way back to 16, but pretty darn close to it at 13.35. Another, like I said, nearly a buck coming in there today. So folks feeling the love out there for zero on the stock side. Let's see what our Eye of Sauron found on the option side. By the way, I'm just waiting for the Tolkien estate to hit us up, say, excuse us, you can't use that name anymore. But until then, we shall run with it. And let's see, 9,917 of these zero D13 puts going up for $2.30. Now, this is a bit of a weird one because it's on Gemini over there. We're just talking about Gemini on the crypto front. Someone asked us if we meant the Gemini exchange or ISE. No. Now we do. So there you go for all you playing the exchange bingo game at home. 225 at 230 was the market for these. That's weirdly tight for a DEES out-of-the-money option in a little-loved name like Zero. I got to wager there was something lurking in the book probably there to maybe tighten that bad boy up. Either way, about almost 9,917 of these D13 puts went up for $2.30. So effectively lifting the offer, but it seems like an artificially tightened market there. So that kind of now comes to detective work. Does it on the offer side? In which case, was that really, are they really buying that? Or perhaps, was it a favorable fill on the sell side? And they were just, someone had an offer in there and they kind of matched it and things got tighter from there. There are earnings between now and December. Obviously, the next cycle coming on August 26th. So not for a while out here in Zero. So Mr. Meatball, a name we haven't discussed before, a weirdly tight market in a pretty illiquid name to get 10,000 contracts done or close to it. That's pretty interesting. And a weird, perhaps, head-scratcher as to what exactly went up here. What is your own personal Eye of Sauron telling you? You think someone drew a line in the sand here and is actually selling these puts, which would be, I mean, D's 13, these are slightly out of the money right now. Or you think someone is trying to take some of the sting off this recent massive recovery and is willing to pay $2.30 on a $13 stock to hedge their recent gains, sir? What is your own Eye of Sauron telling you?
You know, this feels like a broker facilitation where the broker's desk is taking the other side of the trade. Just thinking from a customer standpoint and where vol is, this probably is a vol sale with that kind of long-dated trade. But, who knows? But my spidey sense says it's a seller facilitated by a broker trading desk, but I could be wrong.
I certainly probably like that leg better. Paying $2.30 to hedge a $13 stock straight up outright with no other legs against it, no spread or anything like that. Not my favorite trade out there. If you got that much concern, there are other things you could do, not the least of which what we just talked about on the last week's show, that old stock substitution play. Take a large amount of that stock off the table, put it to work in call side. And obviously, if you're this sizable on the institutional side, there are tax and other legal considerations. Maybe they can't do that, which is why perhaps they're willing to pay up potentially for these puts. But still, an interesting one. I'm definitely going to come back to this one. We're going to put that as to be watched. And we're going to see, what do you think, listeners? You think this is a line in the sand? It's a pretty aggressive line in the sand if that's the case in terms of only 30 cents out of the money. So that's an interesting one if that's the case. Speaking of interesting, let's wrap it up with another newcomer to the odd block. I like when our Eye of Sauron goes out and brings back new names to parse here on the list. This next one is Textron Inc. Ticker symbol TEXT, TXT. I'm sure a lot of texting-oriented names probably wanted that ticker, but nope, it's gone. Textron took it. This is an American industrial conglomerate based in Providence, Rhode Island. They own Arctic Cat, Bell Helicopter, Textron Aviation, and a few other things. It sounds like they're in the aviation and large machinery business out there. This was actually founded way back in 1923 as a special yarns company. Wow, all sorts of nuggets baked in there. Ticker symbol TXT, as I mentioned earlier, trading right now, $33.87. Off about a quarter, or not quite 1%, about 0.75%. This is an interesting one. A year ago, it was trading 49, almost $50. And it seems like it bounced around that level for a while, low 40s to the high 50s for the better part of the year until February, when it got up to about 50, almost 51. And then we all know what happened later in February into March. By the middle of March, it sold off from 51 down to 21. Got as low intraday as 20 and a quarter about. So this thing got hit pretty hard Apparently, no one was buying large equipment out there. Go figure out there. And it has had a bit of a rally since then. And it immediately popped in the couple of weeks after that, from about 2020 all the way up to 29 in about a week or so. Then it kind of sold off again. It had a few fits and starts. It wasn't the immediate V-shaped recovery that we saw from a lot of names. In fact, a few weeks later, as of May 13th, so actually it's like a couple months later, they were still in the low 20s. So they didn't really have the immediate recovery. It wasn't until really in the last month or so, from May 15th till now, that they started turning it up green again. And then they spiked pretty hard back up to 40.5 back on June 8th. So someone was liking something back then. And then they sold off hard again from there. So down to 31.63. So this one's had a hard time maintaining this recovery. It seems like it's given up a little bit again today. So let's see what our Eye of Sauron found. Looks like someone seems like has a little bit of optimism out here. Picking up a 2,000 lot of the July 40s. So not that long term, not that far out of the money, going up for $1.10. Those are surprisingly juicy for a roughly 6 handle out of the money call expiring in about a month. That's an impressive. Let's see, what is the vol? That's an 81.5 IV, listeners. So that's rich. Probably not helped by the fact that the market was 9 cents at $1.12 and they had to pay $1.10 to get 2,000 done. So they were paying some vol on this. That might be an ouchie, but let's see. There are earnings. That's another reason why this is so juicy. There are earnings in this cycle, listeners. The earnings are on July 15th, so a little bit of earnings juice. That makes a little bit more sense now when I see that, but still, that is pretty rich. Mr. Meatball, another bit of old school odd block paper to wrap us up. This time in Textron, someone paying through the nose, 81.5 vol for 2,000 of the July 40 call, sir. What say you?
I mean, this is almost certainly someone doing a direct hedge. They have some sort of underlying stock, or it's a direct play on earnings. Typically puts that are just out of the money against an earnings cycle is someone making a pretty strong bet that earnings might not be good. So it could be that.
We'll see. We shall find out. We're 3 for 3 listeners in the to be watched names. Interesting names, interesting size, interesting directions. What do you think about these Textron calls? You like them? Would you rather sell them? I think I know how you probably would lean on these. 81.5% vol. That's pretty rich. I don't follow Textron too often, but I'm going to go out on a limb and say they probably don't trade at an 80+ vol all too often. But they got earnings coming up. And given the recent history of the stock, maybe some of that vol is warranted. Meanwhile, let's see what Uncle Mike has in store for us. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, it's Monday, listeners. It's time to bring a little bit of that sexy back to the old marketplace, which means there's only one place to turn, to the strategy block and to Uncle Mike. Uncle Mike, sir, what do you have in store for us today as you're trying to bring that sexy back to the market, sir?
Selling premium on treasuries. How's that for sexy?
That might be the sexiest thing I've ever been. I might have to change the rating on this network now, sir. Thank you very much.
So right now, a lot of people, we're back in the conundrum we were back in a few years ago in that we don't have yield anymore in the bond world. Not that it was major up to 3 months ago, but we still don't really, we have even less of it now. So I want to give some people some ideas of some things with which they can do to possibly get some yield. A couple of ETFs to just take a look at, and some of them I am a part of, some of them I am not. I'm not trying to endorse any specific ETF by any means, but let's say that you are looking for bond yield in some way, shape, or form, and you want to just maybe participate in some type of a corporate bond or a treasury bond, whatever the case may be. A couple of things to take a look at just as holdings would be IEF. IEF is a Barclays product. They're the 7 to 10 year U.S. government treasuries, the notes. And so what that is that you're going to get a variety of holdings within it that actually are U.S. government treasuries from 7 to 10 year maturities. Another thing to take a look at would be LQD. That is a corporate bond ETF that holds corporate bonds. That's another thing. If you want to go a little bit more long-term, you can take a look at TLT. Now, with that, those are some things with which you can look at. But in looking at them, you're not going to get the same yields that you were a few months back just because of interest rates dropping so much. But let's say you want to hold them and you want to collect some other interest rates on them, perhaps sell a covered call against them. Now, I'm not trying to endorse one thing or another, but if you do have bond holdings and you just can't justify taking on a bond holding to get 0.05% or whatever the case may be, then the covered call might be something to possibly consider. If you look at IEF as an example, right now it's trading at roughly 121.5. If you go out to July, you can sell the 122 covered calls for around 50 cents. Now, of course, let's make everything a perfect world right now, which of course we know doesn't exist. And let's say that IEF stays the exact same between now and a year from now, then you're going to collect over $6 in premium on IEF if you continue to do that every month and wait for the option to expire and then sell another one the following Monday. Now, of course, that's not reality that I'm talking about, but when you think about it, you do have a way to generate a little bit more yield when doing so. So let's say you don't get the $6. Let's say because of adjustments, you got to get in, get out. Maybe 1 month it goes way higher and then you sell a put to get back into it. Let's say you get roughly half of that over the course of a year. That's an additional $3 with which you can actually get on a U.S. government treasury in the form of some type of yield. Now, granted, it's not yield, it's covered call premium selling. But it is a way with which to enhance your return a little bit while holding 7 to 10 year U.S. government treasuries. Now, if you do the same concept on an LQD as an example, you have the ability to sell covered calls on LQD. Now, keep in mind, a lot of these aren't the most liquid, so just take this with kind of a grain of salt, but you can definitely look at this as well. If you take a look at LQD, that's corporate bonds. You have the ability to sell covered calls roughly 1 month out for nearly $1.30. Now, that's almost 1% on a covered call on a corporate bond ETF for the course of a little bit over a month. Now, understand that LQD does have a little bit more risk to it. If you look at a chart of it a couple months ago before the Fed said they were going to buy corporate bonds, it really was not looking too well. But it is another thing with which to consider if you're looking to hold corporate bonds anyway. And the final one, of course, is TLT. TLT is very volatile in looking at it. But if you are looking to have long-term U.S. government treasuries, TLT holds U.S. government treasuries that are 20 years or greater in terms of maturity. It's something that you can hold. But also you can sell premium on this. Now, TLT is the most liquid of these names with which I've mentioned because of the fact that it's likely because of the fact that it's the most volatile. So in terms of the liquidity that you're going to have, TLT will definitely have the most, but it doesn't necessarily mean it's the best investment for you or what you're looking to get. Now, the final thing that I'd like to mention is let's say that you have a big basket of bond holdings, whether they're funds, whether they're individual bonds, whatever the case may be, and you're still looking to sell some premium. Well, the one thing with which you consider is that it would take up more buying power, but you could sell call spreads on these ETFs that I mentioned and see if they move in correlation with the bond funds with which you have. So with all that being said, my point is that yes, the bond market yield, it's not very good right now. We're kind of right back to where we were a couple of years ago when we had no interest rates again. In a lot of cases worse. But let's say that you like the fact that you're in a bond for purpose of safety, for purpose of just less volatility, whatever the case may be, and you're looking for some yield. Perhaps sell some premium on it. It is available. For some people, this is a great idea. For some people, it is not. If you have any questions on whether it might be best for you, feel free to contact me. I'll have my information out at the end of the show. But in the meantime, back to you, Mr. Longo.
The sexiest of topics, harvesting the old premium on treasury and fixed income related ETP. If the Viceroy were here, he would tip his hat to you in terms of the sheer sexiness of all of that. Well done, sir. Let's see what you guys have in store for us. A little bit of your own quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. You guys take the reins, your questions, your comments here. Let's see how many we can squeeze in. We got our old buddy, Mr. Shortball himself, a.k.a. Dave Lincoln, listening live. He asked Mark if we could share that your little blurry spy photo of the SPX pit. He said, would it be possible to post that SPX floor picture you were talking about to Twitter? Thanks and great show. Well, asking you shall receive, Dave. So I do believe that has been sent out as we speak, so all of you can enjoy the blurry, surreptitious nature of that photo. But you can see for yourself, people are pretty distant. They have the masks on. It's not quite the oh-so-fun, cramped conditions I recall from my early days in the SPX pit, where folks were literally fighting for the same exact 2 square feet of real estate that you were in at the same time. So there you go. We had fun ones all the time. This one was a weird one. Came from a pretty big entertainment or maybe rap label type account, Beef Entertainment. I'm not sure what it is, but they have well over 100,000+ followers to this account, and they decided to share with us before the show a screen grab of their positions in their account. So someone over there at Beef Entertainment is trading a lot, A, and B decided to share it with us, and they highlighted the fact that their account has 234 positions in it. Now, some of these looks like one share of some very esoteric biotechs and things, but still, 234 of anything, I think you could probably argue is a wee bit overdone. Maybe they concur with that, which is why they decided to send this to us. I don't know why. Maybe this is a bit of a veiled cry for help. So if you're listening, Beef Enterprises or Entertainment, whatever you are, yeah, that's a lot. Probably too many. Some of these one share things, you probably don't need these in there. And I'm looking here, and obviously you didn't send us a full list. I don't see many options-oriented lists in here, so a lot of underlying stock. So 234 individual names, probably a wee bit too much. Mr. Meatball, you have people coming to you all the time looking for trading advice and help. Do you recall anyone coming to you recently with 234 open positions in their account, sir?
Not recently, but I've seen positions like that, and it becomes very difficult to understand exactly what you have and what your exposure is. So I would encourage him to get that down below 200 and then work from there.
Yes.
That'll make a big difference in his or her life.
The easily manageable 200 positions out there. Yeah, I don't know what you're going for here, if it's just extreme diversification or you're just being a little silly out here, because clearly it's weird because you shared it with us. But yeah, I don't know what you're doing. Maybe on the offhand when you're not managing your record label or whatever it is you guys do. He's clearly doing a lot of trading of late. Yeah, pare off some of the one lots at least. That might help your life a little bit. Yeah, I think 200 is an easy ballpark. I think if you can get it down to, let's say, under 50, perhaps maybe 25, that would make your life a hell of a lot easier and certainly more manageable. Next up, Uncle Mike. We got a comment here from Max. Max says, uh-oh, Uncle Mike was just about to be able to start trading again, and then this sell-off happened. That sucks. Was he able to get any trades in at the all-time highs? Well, Mr. Uncle Mike, you kind of were just talking about some ideas you have. I think there's a bit of a misperception out there because you've said before that your rules, when the market is negative, they prohibit you from trade. Doesn't mean you can't do anything. It sounds like maybe you should clarify for Max and those other listeners out there what your rules are, and then answer for him. When they hit the all-time highs, did you get fast and loose with it, sir?
Well, so my rules, there's 3 styles of trading with which I'll do. One style would be buy and hold. And buy and hold can be either just buying and holding a stock or trading covered calls on a stock. For that stuff, I've been working for, it hasn't stopped. We've done call spreads, we've done calls, we've done a lot of things on it, but that's just with no leverage to it. The second style is hedge trading. I'm getting less and less of that, quite honestly, as the years go by, because what I'm kind of going towards is just doing the aggressive trading with just extremely boring, dull positions combined with it to kind of replace that. But that could change. It could come back. But in the hedge positions, there's really, I'm well north of the lines in the sand, so there's really not much to do with that right now. And then the aggressive trading, which is probably what I spend a vast majority of my time doing. It doesn't mean it takes up a vast majority. It takes actually a very small section of my assets under management. But with markets negative for the year, my rule says that I cannot have more than a 5% position in my aggressive trading section. And so with that, I've done a couple of things with the market negative. But overall, pretty much haven't done much. When the markets were above 320 in SPY in the year, earlier in the year, you were doing a few things, but gave a little bit of it back as the market went down. But as soon as it went to the 320 level, I had to get out, or I'm sorry, the 321.84, whatever the level was, I had to get out based on my rules. And very thankful that I did, because I know that if there's certain markets that I can't trade in, that it's foolish for me to try to do something when it's not going to happen. It's like if you're a football person, if they put 11 guys right in the line of scrimmage, it doesn't make sense to run a dive right at them. You might want to run around them.
Always going back to the football analogies. Hopefully that clarifies things up for you, Max. Let's wrap it up with this one. This comes from S2B. He or she saying the last 3 months have been a bonanza for the put sellers, depressed prices on equities, and so much fear driving up the price on so many far out of the money puts like this one. He sent a link to Guess Inc. I haven't talked about them in a while. Ticker symbol GES. This came in last week. He's looking at the June weeklies expiring this week, and he sent a link to the options chain out there on the put side, looking at the 10, 9, 8, and 7 puts, and according to this, what kind of yields they can have out here. I'm trying to see if there's IV associated with these. I don't see an IV on there, but they're pretty rich out here. You know, the Guess stock is at 958 right now, so those 10 puts were extremely rich. Obviously, they're in the money now, but the 9 puts are trading for 30 cents, 10 puts 55 cents, 8 puts for a dime, and 7 puts for a nickel out here. I'm just looking. Yeah, I don't see an IV on this screen grab that he sent us. I could pull it up now, but that won't give us what it was for last week. So there you go. Some folks liking, I guess, a little bit of the old premium harvesting. And guess if you're doing so, STB, and you sold the 10s, hopefully you have a plan in place, because we're shy of that 10 handle right now. We said it before. I think the Rock Lobster has reiterated on this network many times of late. If you want to sell some puts, maybe pick a strike that's below where you want to sell it, then maybe go a little bit below that. And then or I should say where you're comfortable picking up the stock, and then go a little bit below that and sell that puts. But if you're okay picking up Guess here at around $10, $9.55, let's see what's been going on in Guess for the past few months. Guess sold off. It was trading $22 before all the madness happened. And then it sold off down to $3.92, hit $3.54. So, yeah, if you're selling those 10 puts, maybe there's a bit of a reason, S2B, why those puts are kind of juicy, because this thing has very recently traded below the 4 handle. So, yeah, if you sold those 10 puts, given what we're seeing right now, there's a chance you could be wearing it a little bit. So, hopefully, you made the decision we've said many times. If you're going to do that, identify a level where you're comfortable picking up the underlying, and then at least you'll be a little bit happier wearing it down to the, hopefully not the 4 handle there. But you're all right. Volume and volatility has picked up. That has made it more judicious. If you find your spots you don't mind picking up an underpriced name, then perhaps this is an opportunity for that. Maybe not these at-the-money puts and Guess, but there are other options out there to discuss. As we keep on going into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, it's time for us to tell you what we're watching, what's on our trading screens, until the next time we can gather here together on this program on Thursday. Let's start in the land of the greasiest of meatballs. Mr. Meatball, sir, everyone's got vol on the brain, so I got to imagine you're watching a little bit of the old volatility. What is on your radar until our next show, sir?
Yeah, you know, what's going to happen with the VIX? My traffic light for the VIX is green, meaning right now the VIX is more likely to go up than down. Obviously, that changes. You know, it's a fluid traffic light. It's kind of teetering more toward orange. But, yeah, I mean, I'm really watching what happens to the VIX, what does the economic data look like, and these next few days are going to determine whether we get that big COVID-19 explosion from all the protests. And that is really, I think, going to determine what happens with the market. You know, do we get the giant spike that a lot of people are worried about from people gathered closely en masse, unmasked,
Yeah, unmasked.
Unmasked.
Yes.
So that's not a good combo.
Exactly. Yeah, and you're right. It was over 10 days since it really popped off. Actually, about 2 weeks now here in Chicago since it first really started popping off and the bridges went up and the National Guard came in. All that fun stuff. Let's not relive it. But so, yeah, we should start seeing those cases popping up now here in Chicago and around the rest of the country as these protests and riots have continued out there. Uncle Mike, same question for you, sir. What are you keeping an eye on until the next time we can gather here together on the option block on Thursday?
3,000, along with the news, with everything that's happening, and also watching any China developments with which we have. There's the second wave. It looks like it's coming in some areas of China, so kind of keeping an eye on that, and that's what I'm watching.
Yeah, you heard a little bit of a flare-up in Beijing. So they went ahead and just sealed off 11 city blocks. All the kind of things you can do in a, shall we say, totalitarian regime that are a little bit more difficult here in the U.S. But you're right, a lot to keep an eye on. Unfortunately, listeners, that music means we come to the end, at least of this program. If you want a little more in your ear holes, you're in luck. Stay tuned. If you're listening live, you'll have some fun stuff piped in there, maybe some boot camp. Maybe some Options Playbook Radio, all sorts of good stuff. And we'll be back in about exactly an hour with the folks from RXX to talk about what the heck's going on the crypto derivatives exchange front. A lot of things popping off. They have their big deal coming up. The Schwab deal got approved. What does that mean for them? What's going on in the crypto derivative space? A lot to unpack. What do they have going on with Fidelity and everything else? We'll get to all that in about exactly an hour, as well as the volume, the skew, the volatility. A lot of things popping off in the crypto vol side of the space. So stay tuned for that. And, of course, we'll be back throughout the rest of the week with more of our regularly scheduled programming. Before we do that, let's go back around the horn. Let's start in the land of Uncle Mike. Mr. Uncle Mike, sir, perhaps I'm like Mr. B2 Beef Entertainment here, and I have over 200 positions in my account, and I need someone to help me pare it down. Where should I go? What should I do, sir?
Just go to your account and hit the close position button, but then after you do that, contact me. I'll be happy to help you find a more focused approach. 630-885-0017, or check out my website at stcharleswealth.com.
Just off the top of your head, what's the largest number of positions you've seen someone come to you with at St. Charles? Like, hey, help me out, Uncle Mike.
Probably in the mid 100s, I would say. That's the highest. So, I know I trade well into the millions of dollars for my groups of people, and I typically have about 4 that I look at. So I think being focused and is a little bit better way to go.
Yes. Yes, I think I should say so. So, yeah, if you have over 200, a lot of our audience gets on the active side, I know, but if you have 200-odd positions you're looking at right now, yeah. A challenge out there. Mr. Meatball, same question for you, sir. If folks want to check out your VIX traffic light, or they want to join the Trading Legion, or all the other cool stuff you have cooking, where should they go? What should they do?
Go to options.com, sign up for our mailing list. I send out viable, actionable research and insight on volatility in the markets every night, every day, 6 days a week. I take Friday nights off. That's about it.
Check it out, optionpit.com. Man's got to have one night a week off. By the way, your compatriots there, Mr. Uncle Mike at RCM, are already chiming in on Mr. Meatball's secret blurry spy photo of the SPX. They said it's hard to scream those bids and offers at each other with the masks. Yeah, they're a little bit far away from each other now, too, so that's going to complicate things. If you haven't, check it out at Options on most of the major social media platforms. You can find it for yourselves over there. Most of you already follow there. Listen, but if you don't, head on over there. Good follow, if I do say so myself. A lot of good stuff hitting that account throughout the week when we're not doing shows. Surprisingly, we're not talking all the time here. So you can keep up with us over there at Options, and, of course, the website, theoptionsinsider.com. We'll be back in less than an hour now for all the goodness that is the Crypto Rundown. Then we'll be back throughout the week for all sorts of good stuff. We got TWIFO, Option Block again on Thursday, Vol Views on Friday, OPR on Wednesday. We got some more boot camp coming your way on Wednesday as well. So all sorts of fun stuff. Stay tuned for that. Stay safe out there. If you got 200-plus positions, maybe whittle that down a little bit. And we'll see you back here next time for more of the Option Block.
The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.